Hello everybody, it's Tortoise Investing coming at you today with 3 dividend kings that you can buy and hold forever. These 3 stocks have been increasing their dividends for over 50 years. I'm talking through the dot-com bubble, through the financial crash, through wars, through COVID, everything and anything, these companies figured it out and kept raising their dividend. Now, before we dive into those, if you're new, please hit that subscribe button, hit the like button, helps the videos out a ton, and I greatly appreciate it. Just takes a second to do. Now, none of this is financial advice. Without further ado, let's go ahead and take a look at the stonky stonks. First up, we have Johnson & Johnson, Procter & Gamble, and Coca-Cola Company. Now, if we take a look here at Johnson & Johnson, adjusted free cash flow yield of 3.25%, have a dividend yield over 3% now. Very nice. Payout ratio is a little high right now at 93%, but no worries. Payout ratios. Free cash flow is what matters with those. That's what your dividends paid out in, and Johnson & Johnson generates a lot of that. Now, Johnson & Johnson is down recently, $180 down to $158, so might be a good entry point. Do your own research and see if you like what you see. Revenue has been increasing at a rate of 3.5% over the last 10 years. This is a very mature company, but a slow and steady increase there. Free cash flow, 3%, right in line with revenue growth. Very nice. EPS, 5.72% over the last 10 years. And when it comes to their balance sheet is absolutely amazing. They have $34.9 billion in debt, but they have $24 billion in cash, which is very nice. And even if we take a look at the EBITDA, their EBITDA almost covers all their debt. So, not an issue there. Usually I like companies do not have more than 3 times their EBITDA in debt, and Johnson & Johnson's not an issue. Dividend's been increasing at a rate of 6% over the last 10 years. Very nice. And they've been increasing their dividend for 62 years. Awesome stuff. Return on capital employed, been around 15 to 18 area for a while. The market average is 9 to 8. So, yeah, Johnson & Johnson ticking in the right direction on a lot of things. Next up, Procter & Gamble. You probably have some of this stuff in your house and don't even know it, or you might even know it. Toothpaste, mouthwash, whole plethora of different things. They have been hovering around this area for a bit. They do have some dips here and there, but it is a very reliable company with a very strong financial sheet. Adjusted free cash flow yield 3.78%, dividend yield 2.6%, payout ratio 62%. Revenue's been increasing at a rate of 4% over the last 5 years. Look at that. They have gotten things figured out. They're in this kind of downward slump, but since 2015, up and to the right. So very nice. Free cash flow right at 4% again since 2015, up and to the right. EPS, we're going to see a similar story here, 9.96% over the last 5 years, ticking in the right direction. Their debt, they have $23 billion in debt. Their EBITDA was almost $22 billion. So again, no issues there. Very strong financial sheet. Dividend has been increasing at a rate of 4.5% over the last 10 years. Again, just all reliable, been increasing their dividend for 68 years. My goodness, these companies have been increasing their dividend for a lot longer, and a lot of yens have been alive. Shares outstanding. I know there wasn't much to look at with Johnson & Johnson, but Procter & Gamble, they have been buying back shares at a rate of around 2%, so that is very nice. Yeah, in 2020, they were at $2.63 billion. Now they're at $2.48 billion, so quite a few shares bought back there. Very nice, returning some capital to their shareholders. And return on capital employed in 2020 was 17.9, and since then has been above 20%, which is beautiful. Very nice. Very strong. And lastly, we got Coke. We're going to take a look at. Got just free cash flow yield 3.94%, dividend yield 3.48%, payout ratio 73%. They have had a year. They are down 14% year to date. They were around 64, 65 bucks at one point. And yeah, they have fallen. But is it justified? No, I don't think so. Coke's a moat and a half. Just the revenue been increasing at a rate of right at 4% over the last 5 years. The free cash flow almost 12% over the last 5 years. Very nice. EPS. This is throwing things off very badly, but you can see it is trending in the right direction. Debt, they have $36 billion in debt. Their EBITDA is 13.8. So again, that still falls into my rule of thumb, not more than 3 times their EBITDA. If you take a look here at the quarter to quarter, they have been paying off their debt. So last year, no, in 2021, they were over $40 billion. They have paid that down to $35 billion. So they are tackling the balance sheet aggressively, and I love it. Pay that debt off. Over the last 10 years, they've increased their dividend at a rate of 5%. So they are mid-single digit when it comes to their dividend increases. And when it comes to shares outstanding, again, not too much to look at there. Return on capital employed, again, market average is about 9 to 10. They have been in the mid to upper teens for a minute. And they've been increased their dividend for 62 years. So yeah, there you go. 3 dividend kings that you can buy and hold forever. Let me know down below if you own any of those. Like I said, make sure to hit that subscribe button and like button for more. And until next time, see you.